Hi guy, welcome to Success Academy. Please like and subscribe to support us. Today's topic is trading Forex. Unlike share price movements, which are measured in recognizable units of currency such as pence or cents, Forex changes are measured in very small units called pips. For example, if the Euro's United States dollar price moves from 1.11500 to 1.11510, that 0.0001 United States dollars rise in value represents 1 pip. For most major currency pairs, a pip represents a one-digit move in the fourth decimal place. One important exception to this is where the yen is the counter currency. Here the second decimal place is the one to watch. Any extra decimal places shown in the price are known as fractional pips or pipettes. What is a lot? Each 1 pip movement in a Forex price is only worth a tiny amount. So, to take advantage of these small changes in value, Forex is traditionally traded in large batches called lots. A standard lot is 100,000 units of currency. You may also come across mini lots and micro lots, which represent 10,000 and 1,000 units respectively. Small investors generally don't have access to such large amounts of money, so many Forex brokers allow clients to trade on leverage. Leverage essentially means you can open a large market position with a really small deposit called margin. Any profit or loss is based on the full position, however, so gains or losses could far exceed this amount. We look at leverage in more detail in the orders, execution and leverage course. Major pairs. Theoretically, you can exchange any currency in the world for any other currency, which means the variety of Forex pairs you could potentially trade is vast. You could even speculate on the price of the Armenian dram versus the Zambian kwacha, AMDZMW, if you found a broker willing to trade that pair. In practice, however, the majority of Forex trades take place on a few select currency pairs called the majors. What constitutes a major pair varies widely you speak to, but most include the following 6 which account for over 80% of global Forex trade. Notice that all these pairs include the US dollar, which is by far the single most traded currency in the world. Minor and exotic pairs. Pairs which are traded less frequently are known as minor currency pairs. You may also see them called cross-currency pairs or simply crosses, particularly if the US dollar isn't involved. The most popular minor pairs tend to contain the euro, sterling, British pounds, or the Japanese yen, JPY. Some Forex brokers may also refer to exotic or emerging pairs. These generally consist of one major currency against another from a smaller emerging economy, for example British pounds MXN, sterling versus Mexican peso, or United States dollars PLN, US dollar versus Polish zloty. Finally, you may come across Forex classes which are based on a region, such as Australasian pairs or Scandinavian pairs. These classes set currencies from their respective regions against one another or pair them with others from around the world. For example, Australian dollars NZD, Australian dollar versus New Zealand dollar, could be categorized as an Australasian pair, while Euros NOK, Euro versus Norwegian krona, would be a Scandinavian pair. Question. Class the following currency pairs. United States dollars JPY, NOK Swedish krona, British pounds HUF, Australian dollars NZD, Euros CAD. Please leave your answers in comment box. What drives the Forex markets? We've looked at what Forex is and how to place a trade, but why do currency prices change? Well, currencies are effectively barometers for the health of the region they represent. So, if you place a trade hoping a particular currency will rise, you are essentially betting on the economy of that country. In general terms, the stronger the economy of a country, the stronger its currency will be compared to other currencies. Therefore, the factors that affect a country's economy tend to have the greatest influence on a currency's price. These include interest rates, inflation rates, government policy, demand for imports and exports, economic statistics such as a county's growth figures, unemployment levels and manufacturing data. Now, let's go to lesson summary. Forex movements are measured in pips. Pairs. A pip is a one-digit move in the fourth decimal place of the price. Forex is traded in standard lots, which represent 100,000 units of currency. Currency pairs are usually classed as major, minor or exotic. Generally, the stronger the economy of a country, the stronger its currency will be. Thank you for watching and see you in next video.